Nairobi?
Lagos and Nairobi.
Oh.
But it's true. Actually, Kinshasa should be in there. And the last one in the middle, I put it in the middle because I always say that the day Africa sorts out this particular infrastructure challenge, which is rail, instead of thinking road all the time, we would make leaps and bounds, for me. And I don't know if a number of you remember, about 15, 20 years ago, China was building railways to seemingly villages. People said, why are they building things?
Ghost cities.
Supposedly.
Ghost cities.
Yes. Supposedly ghost cities, villages, and places. But when you look at it today, they had a vision 30, 40 years ahead. So look.
50.
Maybe. Yeah. Yes. So look, these things is going to be developed eventually. So let's build this thing once and for all. And this thing can be used. So now somebody can speak.
Cities created after the roads.
Yes.
This is the concept of the road and the belt.
Yes, Belt and Road Initiative, yes.
Because they realized that after building the roads,
people just create a city, yes.
Popped in, so
yes.
they created entire regions from scratch.
Absolutely. So this particular train is the latest one inaugurated between Dodoma and Dar es Salaam in Tanzania. Look, the number of people in Tanzania and even international who have told me about this train that has changed their life. So I was in Zanzibar over the holidays, and I'm speaking to an entrepreneur, and he tells me, look, it used to take me 2 days to go from Zanzibar to Dodoma.
Yeah.
Now, in one morning, you can go.
2 hours. 2 hours.
No, so you fly to Dar es Salaam, and then Dar es Salaam, Dodoma. One morning. A bit late because of movement, etc. So there's a real power to rail. That's what the point I wanted to make. So, does anybody know the difference between private equity and venture capital? That is an important one to make. Yes, please. You need a big voice. Switch it on.
Venture capital probably looks for startup companies, whilst private equity looks for already growing companies with good potential.
Thank you. Thank you very much. That's pretty clear. So that is it. So technically speaking, venture capital is not really adjusted for infrastructure, right? But then you can look at it in a bit slightly different way, right? So a venture capital fund can probably invest in infrastructure if it's digital infrastructure, because the return perspective are pretty much higher than a typical private equity transaction, right? So I just wanted to mention that, even though there's a technically a difference, even venture capital can invest in infrastructure that is more digital, that can multiply much faster, etc. So investing in a fintech stack or data infrastructure could be an infrastructure play from private equity, but also from a venture capital fund. So that is, are they suitable, and what are the challenges and opportunities? So I'm going to go through this relatively quickly and stop at a few slides so that we get the time to have a really good conversation with the speakers that are here. So again, private equity, you mentioned it focuses on mature projects, the advantage of using private equity for infrastructure, et cetera, et cetera. So that's exactly what I was saying. VCs expect high returns that are not aligned to public infrastructure projects, right? Just to, as a clarification, and then the risk aversion nature of PE companies. So what are the funding models for private equity in general? So just to make sure we are on the same level, because it's usually just, you know, who's a professional in infrastructure? Just raise your hand so that I don't spend too much time explaining. Okay, so I can spend a bit of time. So,
will you share the PPTs?
If you ask very nicely. No, obviously I'll share. I'm just joking. So, what are the funding models that typically private equity funds or infrastructure projects can use? Let me put it this way. So, the usual way is public financing. We talked about the China model, but Europe did that before. So many other countries use public funds to develop infrastructure because it was critical for them to create an ecosystem that was conducive. That's one. Private sector investments. In many countries where there are policies that enable private sector to participate with the government into infrastructure projects, it's much, much easier. So there are different PPP laws, offtake laws, etc. I'm sure Christian can tell me a lot more about that. And then, you know what, Christian? I think I'm going to bring you on the panel as well. I think that's done. And then sovereign bonds. So people can issue infrastructure bonds or sovereign bonds to finance an infrastructure on the country. Public-private partnerships, they've not always been great, that I can tell you. There've been issues, but a lot of them, if the policy environment makes it acceptable, it's usually better to do that, okay? Blended finance, this one is one of the ones that I really like, because basically, you mix and match whatever Lego bricks is adaptable for this particular project, and then can bring first loss, guarantee, securitization, off-takers, structure that in a fancy way in a tax-efficient jurisdiction, Mauritius, Luxembourg, Cayman Islands, etc., etc. That makes it good for all the different stacks of investors that are interested. Public infrastructure bonds, I mentioned, is a type of bond. So if I go back to here, it's really about traditional ways to finance infrastructure, okay? So here, I really, as I mentioned to you, ASIME Partners is really an alternative investment manager. We're looking at other ways to do so, okay? So, climate finance. I'm going to use the opportunity to ask the question, does anybody know, I think there's only one in Ghana. Actually, maybe two. One of the two, I think there's two, entities that are GCF approved. GCF is the Global Climate Finance Organization based in South Africa, in Korea. They have billions of dollars of climate finance that technically they're struggling to deploy. There's only two entities, I think, Ghana, or the rest of the, go on. Yeah, yes, and then? So for EcoBank, I know. Fidelity, I'm not sure. But maybe. Yeah. So what that means is that when you're a GCF-approved entity, you can leverage very affordable climate finance to finance infrastructure project if they tick the box of being green, renewable, offsetting carbon, etc., right? This is very important. So this one is, for me, a underexploited area to finance climate on the continent. It's underexploited. You know, between the green bonds and even the structured climate finance transaction to be able to raise even private equity fund. And maybe I can stop for a minute. So, according to my, for now, information, there's only one fund in Africa in the VC space that has GCF approval. It's Acumen. Acumen has Kawisafi Ventures and another one called RF, Africa Green something fund. So it's only Acumen fund as a VC fund, that's more tech investment, that has a GCF mandate. And it usually takes 2 years. Okay. So Islamic finance, do you know of any Islamic finance infrastructure company? Yes? You need to be on the panel for sure. You'll be on the panel.
Fountain of knowledge.
Yes. Okay, true. And then we've got a number of international development banks like ISDB, Islamic Development Bank in Jeddah, sometimes African Development Bank, etc. Finance, Islamic-linked thing for infrastructure. There's a new kid on the block, very discreet for now, in Senegal, that is doing Islamic finance VC. So it's a bit of a segue from infrastructure. So it's called Kuwait Capital in Dakar, doing great things around leveraging Islamic finance to do venture capital and also investing in a few infrastructure plays like hospitals and clinics. In terms of alternative models, I'm not going to go through all of these examples. I think the one that tends to be a bit controversial with governments, etc., is this one here. Natural resource-based financing. Who can tell me about it? Some ideas. Yes, please. You just introduce yourself.
Oh, what I know is that they use the resources of the country as collateral for financing.
Exactly. Is it controversial?
Yes.
Okay, we agree. But I think there's a way that the fees, the returns that country can make out of it can help them do that, number one. But also the resource-based backed, the natural resource-based backed financing can also enable whoever is going to pick up the resources and force them to actually develop the infrastructure to do so. And that's very helpful. So let's say I have a mine in a country that I will not name that is producing a thing that goes into the phone. We all know which one it is. Essentially, you can go say, look, I'm going to mine this thing, but in exchange, I'm going to build all the roads to go there, build hospital, clinic, and schools, etc. Unfortunately, it's usually a nice conversation. I don't know how many cases where it actually doesn't happen, but I think if we do enforcement of that, that could be much, much, much better. And the last one, yes? The last one I wanted to...
I did have a question.
Yeah.
So you said they'll say, okay, we'll mine these minerals and we'll build all these things, right? They're getting the funds from the minerals they mine, is that the exchange?
So they mine the minerals, so they fund their own thing, they give access to the concession, 30-year concession. And then there'll be a revenue share between them and the government. But then as part of the socio-economic benefit around, they need to build a road, schools, accommodation for the workers, but also maybe if it's a electricity or energy producing entity, distributing energy within the region. So the last one I will discuss very briefly is technology and digital financing. I would say in today's era of AI, machine learning, agents, Africa needs to wake up to combine climate finance and data and compute. As soon as we can do that, so imagine we can set up renewable energy powered data centers in key locations where that power will be very cheap. They can power data centers locally held. It's going to change a lot of things. So I have actually a data center project here that I need to find financing for here in Ghana. There are a number of them in Kenya. So I don't know in Kenya if you heard about this project where they building one of the biggest data centers in East Africa in a geothermal location. So basically, their data center is going to be placed near a geothermal facility to power that data center. And then obviously they get carbon credits for it. So I've decided to give you a few examples. I've talked about them. I don't think I'll spend too much time on it here. A few interesting examples from the continent. Kigali Bulk Power Project, Lekki Deep Sea Port, Inga 3, we talked about. Christian? Inga? Inga.
I was on the phone.
No problem. I'll just talk to, yes, go on.
I have a question because
Yes,
I
please.
don't want this to just be informational. My question is, I want to know where do we miss the mark in getting the financing? Because what I know is a lot of times we want the financing, but we don't build the foundation to get the financing. So what are those foundational elements that are required from us to be financeable?
You are not there, that's fine. This one, not enough bankable project. And so I give an example. Do you know AFC, African Finance Corporation in Nigeria? I think it's about $9 billion balance sheet. They fund a lot of infrastructure projects on the continent. But they've reached a point where if they do not go one step further, being doing project preparation, feasibility study, etc., they will not get bankable deals, right? And so what they've been working on is some sort of project preparation facility where they get that. AFDB has, World Bank has, IFC, all these people. But I think what I would say is that, and I'm not indicting anybody, but I think, and I was actually having a conversation about 4 or 5 years ago about that, is instead of doing all these TA, capacity building sometimes that are not always giving the return on investment, one project that I think would make a big change on that is train transactional advisors that have deep sector expertise to do all these project preparation with a revenue model that makes their work, right? I'll give an example. Most of the time, if you're doing I've been a transactional advisor, I actually stopped because you realize that you do a lot of work for maybe 18 months, sometimes without retainer. So you need to figure out a way to finance yourself for a number of months. And when you get into transactional close, trying to do something, there's always a story. People always try not to pay you for the work you've done. Intellectual property on the continent sometimes is not valued properly.
Even when they get the funds.
Look, I can tell you about financial institution here. I did the work. We're 11 years on. I've stopped chasing them. So, you know. Anyway, I think what I'm trying to say is that bankability, transactional advisory, etc., we need to build a capacity more on locally. And unfortunately, a lot of those advisors, transactional, tend to be international companies that have the international manpower to come and do the project here. I'm not saying they don't exist on the continent, but I think we need to go from 100 to 100,000. 100 people to 100,000 people to get more projects done. And I must say that a few countries that are actually cracked that long time ago, South Africa, Egypt, look, the amount of infrastructure Egypt and Algeria build fast is very impressive. And by the way, I can talk for hours, I have to stop. If you want to work on very interesting infrastructure project these days, I would say Morocco. You know, they're going to host, 9:50. Okay, I need to stop in 5 minutes. They're going to host games. They're learning from the Qataris how to do all these games, etc. They're going to do the Olympic Games, etc. Go to Morocco today, you work on very, very interesting projects. And the king is very open for partnerships, etc., and a number of stakeholders there. So let me move on. So I had talked about these things. Examples, I discussed many. I'm trying to figure out, I think I'll stop there. No need for further examples. Anybody has questions? Here. That was the last slide. Yes, please.
Question, please. So,
No. We're here for, actually, you know what? Okay, you have a big question.
One of the things you stated was that you work with these projects and there's issue with them paying you. So, and this is how we've been able to work in the U.S. on projects like that. We speak to the funder and we put in a demand to the funder. How does it work on this end? So like we, like for instance...
It's actually better that way.
Okay.
But very often, people will reach out to you for support. But they don't have the money to pay you. They say, oh, you do it on full risk capital. You get your fees, etc. What I've decided now is, either you have a retainer or you don't. That's it. But going to the funder is actually the better way. So go to an AFC or an APD, etc. But you know, you need to understand that there's procurement rules. So essentially, until you know they need a transaction advisor to do stuff, you know, it's kind of a chicken and egg problem. Maybe you should just register yourself in their databases, AFD, AFC, and all these ones, so that your company is in the database. These are the scales. This is my track record of total projects are financed and structured. And then develop those relationships. That's probably the best way forward. Any other comments, questions? So I'll maybe because a lot of people trickled in since I started, I'll just do this. What do you see here? For those who were here before, no answers.
Some kind of densely populated area with extra lighting. Somewhere, maybe it's a lake. Yes.
Aziz, what do you see?
Lake Victoria instead, that big.
What do you see?
Body.
Yeah, I heard you.
A lot of dark places, a little bright spots.
It's all relative, because if I gave you the same picture 10 years ago, you'd be shocked that it has evolved, right? So that was the first slide, just to get people to think about infrastructure. It's a long game. And that's the idea, to say, look, you may see it as more darkness now, but it's a progression from 10 years ago, number one. But actually, if you project yourself in 10 years, it may be all of this place lightened, except for the desert. It's a bit hard, right? And also something you may even see in those maps is the progression of the desert. Because there was maybe light then, and then slowly less because of the infrastructure. Anyway, but honestly, this desert challenge, for me, is also a massive opportunity. Imagine you can put out panels, wind. Yeah, Egypt. Look, you go to Cairo, there's a lot they can build. And then I'll finish with, just to say, don't hesitate to go to ASIMEpartners.com, all attached. We do all these things, alternative investments, impact investing, disability and inclusion. I insisted on that. I talked about what we see. I think that's pretty much it. Huh?
Can you give us a case study of the work you do so we're clear about what you have to offer?
Yeah, sure. It's on the website, literally. ASIME Partners. But I've been speaking for 50 minutes. We need to go to the panels, but we can talk after. Okay. With pleasure. So, now I'm going to call upon two people. Eugene, please. Yeah. And then, so you introduce yourself, yes. And then, Abraham. So, let me switch this off. Yeah, I'll just leave it there. This one. So, mics are working? Yep. Okay, thank you very much. So, I've introduced myself before, etc., so we're not going to go there. So, we spend the first minute so that you two introduce yourselves, and then I'll ask you questions about, what you do more, and then we can start digging into questions on infrastructure. So, Eugene?
Sure. Hi, my name is Eugene Teria, co-founder and CEO for Second Stacks. We build digital infrastructure that powers cross-border trading in capital markets on the continent. It sounds like a lot, but at the core of it, what we are trying to do is allow for investors, no matter where they are, to be able to find what is publicly available on the various exchanges on the continent and be able to grow their wealth by diversification. Today, most jurisdictions effectively have some exchange infrastructure in country, but you know how most of our economies work. If there is economic headwinds, if there are any types of geopolitical tightening, then you are seeing currency depreciation happening, as well as eroding of the value of the assets themselves. But in a space where all of the countries are moving in different clips, being able to diversify then allows you to take advantage of where jurisdictions are growing, earning your keep from those jurisdictions to balance whatever it is that you are doing at home. And so the idea here is to work with financial institutions, primarily your brokers, your asset managers, your pensions, to be able to build diversified portfolios that can resist a lot of what we see in single jurisdictional sort of invested styles. Thank you.
We'll ask you a lot of questions about that after. Abraham.
My name is Abraham Mensah-Belly, investment manager for Venture Capital Trust Fund. Venture Capital Trust Fund is a creation of the government of Ghana, and the idea is to fund managers or investment vehicles so that they invest into the SMEs or the businesses that are doing the work on the ground. We have been in existence for the last 20 years, and as of now, our portfolio is about 14 funds, but the desire is to grow these funds and especially drive specialization as we grow the funds.
Thank you. Christian?
Thank you. Good morning, everyone.
Good morning.
Yeah, my name is Christian Kalonji. I am the technical director of the agency that is developing the Grand Inga project in Congo Democratic. And Grand Inga is essentially a massive hydropower project, the size of 42,000 megawatts on a single site that we intend to develop in 6 phases. The first one that we are currently preparing is 11,000 megawatts. And the project actually is not a project, it's a program cutting across various sectors, including electricity generation, mining, green mining facilitation, transport, connectivity, and competency development. So these are essentially the pillars that we are currently developing, and we're trying to prepare the project itself, running various studies, cutting across the environmental, the engineering parts, and the social development activities. So these are in a nutshell what we can say about the Inga project.
Thank you very much. So what I want to do is there are a few other people that we bring on board. It's actually interesting. If you don't mind, we'll move slightly to the right. Okay. I think it's a nice little community now. Please. Because I don't like sitting, I'll take the opportunity to stand. It's true. Everybody knows me that knows that I don't like sitting at all. Sorry. Sorry. So, we're going to continue, please.
Thank you very much, Steve. So, good morning, everyone. My name is Yao Brakon Oseitutu. I'm Strategic Partnerships Manager at Impact Invest in Ghana. Impact Invest in Ghana is a non-profit that is part of a bigger global network known as GSG Impact that works around the world to advance impact investing. So in Ghana and West Africa, and together with our African partners, we advance impact investing by engaging ecosystem stakeholders. We identify what the gaps are, and we design research programs and then special initiatives to increase impact investing in Ghana and West Africa. So pleasure to be here and look forward to engaging. Thank you.
Thank you.
So thank you. I'm Peter Eidu, economist with the UN Resident Coordinator and then the UN country team. And from where I'm coming from, you know, our major goal is the SDGs and the SDGs of everything. And if you look at the SDGs, it also reflects the development priorities of every country. I mean, when you contextualize it with country needs and financing, the game changes. And you all know at the time they launched the AGGs at 2015, we were dealing with about 2.5 trillion in terms of financing gap, between 2.5 and 4.5 trillion. COVID has come, global crisis affecting supply chains and stuff, and we estimate that at least additional 4 billion annually is adding up, in terms of dollars, is adding up to the financing gap globally. And for developing countries, our case is worse off because of the issues that he mentioned, financing and availability of pipeline of bankable projects. So for us, venture capital presents another opportunity for all countries, all stakeholders to close this financing gap. And that's where I'll end.
Excellent, thank you very much. I have to correct, it's private equity, not venture capital.
Yes.
All right, thank you very much. So we'll go back to Eugene. So Eugene, one of the things that I will try to understand is your solution, the work you're doing, is building the infrastructure for companies, investment companies, to invest in assets across Africa. So my question to you, and that's the conversation we're having, do you believe that there's enough physical infrastructure to power your scale up down the road? So imagine in the next 10 years, do you have enough infrastructure to support your scale up? That's my critical question here.
So I don't think so. Let me lay that out. Today we operate across Ghana, Kenya, Nigeria. We are actively working on plugging into Ivory Coast to have access to Francophone West Africa. And literally in every jurisdiction, which we kind of expected, it's a different ecosystem that we are plugging into. Part of what makes our approach unique is we're not trying to boil the ocean by trying to standardize everywhere. We are leading with the fact that we know how to deploy this infrastructure. We'll work with what is there and be able to abstract away from it those differences so that as these ecosystems change, we can also continue to grow what we are doing. But there is things like, I think it was last year where subsea cables went down. So our infrastructure was running.
Everybody remembers.
But you couldn't get into certain countries that we needed access to for execution. So we started thinking about, hey, do we now go back to the exchanges and the investment firms and deploy our own cable, or find innovative ways where they co-locate in data centers that are being developed so that everybody doesn't have to repeat the same thing.
Absolutely.
So we're starting to look sort of from the digital infrastructure aspect to the hard infrastructure and creating the solution in a way where it will be resilient, because that is definitely part of our scope now.
I figured. We have a term for that. It's phygital. Physical and digital combined. Christian.
Yes, please.
Tell me a bit more about this program, because it's pretty impressive. 11,000 kilowatt. Megawatt for phase one.
Yes.
How long did it take to make it start?
Okay.
Mike.
No.
Closer. Just closer. It's on, closer.
It's, we are currently in the project preparation phase. And that will take us like between 4 to 5 years.
Wow.
Just the preparation. The engineering, the social development, the environmental studies to make sure that there is no chaos to the environment, how do you call it? The activities around the communities.
Yes.
And the connectivity to the site, because this will be disruptive to the existing infrastructures. There is no existing road today that will sustain the kind of traffic that will be
on the site,
required to ferry the equipment to the site. The ports might be reshuffled. The bridges must be redesigned.
Yeah, for the weight of the engine, the machines.
Exactly.
Yeah.
So we must make sure that after the energy is produced, it can be consumed.
Yes.
Not only distributed,
consumed on site.
So yes. So we create special economic zones to attract investors, manufacturers, energy-intensive activities like green mining.
Yeah.
So that we don't we stop exporting raw materials.
Yeah.
But adding value before we export energy.
Yeah.
Connecting the regions and preparing our people, the youth, to upskill their competencies, so that when the project starts in the next 5 years, they are ready for the jobs that will be created, and make sure that the SMEs are also prepared to pick up the opportunities that will be there.
Wow.
in terms of subcontracting and
the whole ecosystem. Yeah. Wow. So that's a very, very long term. So hopefully you get 50, 60-year financing and concessions. We're going to move to here. So what thank you. So we're going to touch upon, maybe you can shift the mic, yes. We're going to touch upon the role of impact investing in Ghana and your interest in infrastructure. Go on. 2 minutes. I'm going to count because time is running.
Okay. Wow, that's a tight one. So I'll just be quick. So impact investing Ghana is all about increasing impact investing for development. And as you have said, as we've all, the various speakers have said, the development gap is an infrastructure gap. Africa's development. That's why I like the picture from space, yes. And so what are we doing? We are working at several levels. One, the supply of capital. We are working with intermediation between supply and then demand, and on the demand side. So I'll just touch quickly. So on the supply side, one of the things we do is, we are just not a think tank, we have actually launched and designed catalytic vehicles. So catalytic capital is concessionary capital. So we have launched a vehicle called Chigaba Fund of Funds. This is supposed to be $75 million. As we speak, we have catalytic investors in town who are doing due diligence. So Small Foundation, FSD Africa, FMO, etc. And these are, we work with partners. He's already met them. So that's just one on the demand side. In our counterpart organization in Nigeria, even has a bigger one. Nigeria is a bigger market. So $1 billion wholesale impact investment fund. They are also working towards a first close. We are planning to do a $30 million close for Chikaba by the end of this year. It's a fund of funds, so it will invest in other funds. On the demand side, we work with Transaction Advisors Ghana. You said pipeline is a problem. So building a capacity of transaction advisors, also facilitating what you mentioned, paying for this. So we have a transaction advisory subsidy, because we realize that sometimes some support is needed to be able to fast track. And on the intermediation side, we have Deal Source Africa, which is all about connecting the private funds to businesses.
Opportunities, yes. No, this is very clear. Thank you very much. Your neighbor? Thank you. Yes. So on the UN SDG side, maybe for Ghana specifically, what have been maybe the projects that on the infrastructure side, maybe on the SDG specifically, but maybe one or two we can touch upon for Ghana that we can have a conversation about? Thank you.
So on the infrastructure side, we are more like a multilateral agency, and we work with grants a lot. And we don't tackle so much of huge infrastructure. In Ghana, we explored one model within the housing sector, working with one of our agencies, United Nations Office for Project Services. We're trying to bring in some funding to construct some affordable housing projects, and I think that was launched 3-4 years ago by the Vice President, if you remember. So that's one area we normally look at. So for infrastructure specific, we look at helping with the procurement systems and strengthening the systems to be able to cater for funding that will come into finance huge projects. We don't go into practical service delivery in terms of the infrastructure. But let's just touch on a few funding stuff we were trying to do. With our UNCDF, that's the capital fund, and that is now more like a funding wing of UNDP, United Nations Development Program. We explored a few innovative financing models using crowdfunding, and we recently launched crowdfunding guidelines to support some of the projects. We were also trying to work with the Ghana Investment Promotion Center, the SDG Advisory Unit, to establish a funds on funds initiative, a 250 million funds on funds, working with ground up project with the convergence, so that we get a fund manager in Ghana to further, disburse to other fund agencies. But unfortunately, we got caught up in the engineering process, and then we had to slow down. So that's something that we are also looking out for. We have also been working on investment opportunity areas. Like I told you, we are not directly into the...
You're facilitating, creating an environment.
Perfectly. We have an SDG investor map that throws out the investment opportunity areas in digital, agricultural, and health. And that is also there. And we have a portal with the global investors for sustainable development that you can easily go and see the projects that we have outlined.
I think I've been there before.
And we work with, we have one of our private sector wings, I can see him here, Global Compact as well, to woo private investors also into key projects for developing countries as well.
Excellent.
Thank you.
I might come to you for something specific, is doing some lobbying for the GIPC law to change. We need investors to bring money in, and we're not mining companies. We need a small entrepreneur. That law has to change. That's kind of a local thing. We'll finish with Abraham here. So tell me, Abraham, tell us, how do you, as VCTF, Venture Capital Trust Fund, help build the investment ecosystem? Because I think I remember the emerging manager programs. Tell us a bit more, because it's also part of that. Thank you.
So maybe I'll hop on what Christian said. After the infrastructure has been done, it must be consumed.
True.
And that is one of the things that venture capital seeks to build. By building the venture capital private equity ecosystem in Ghana, making capital and funding available to SMEs, small and medium scale enterprises, so that they can scale up to take full advantage of major and mega infrastructure that is built or developed or funded. Now, you will notice that when we are talking about infrastructure, as Yao said, the gap is big. Most people concentrate on the supply side. But in feasibility study for the supply side, you want to look at the demand side and see, if I invest into this infrastructure, as big as it is there a market for it? And that is where venture capital comes in. And as I said, venture capital is a state institution mandated to invest in SMEs, but we don't do it directly. We do it through fund managers. So if you're a fund manager here and you're raising funding, we would like to talk to you. Now, with specific development of the venture capital ecosystem, we are coming up with a fund manager development program. Now, we know that we need a conveyor belt of fund managers, people who are knowledgeable, people who have the necessary skill to deploy the capital when they receive them. Also to raise funding from the likes of the new fund that is, I'm interested. The new fund that is coming up, Chigaba I already know about, because when we get a lot of funds, then we are able to scale up smaller funds who would then do the direct investment. Also, we have the analyst program. One of the things that the industry, or we have seen for the industry, is that the learning curve between leaving school and becoming an investment professional is quite long. So the program shortens the runway by getting fresh graduates out of school into the room, give them the basics and the skills that they need, so that when a fund like ASIME comes in and they pick you, it is not now that they are going to use another 1 year to train you. You're already semi-skilled. They polish you a little, make you specific for their use, and then they deploy. The final thing I'll say is that we also realize that legislation is important. So we are currently, with the Securities and Exchange Commission, championing the Limited Partnership Act for Ghana.
Thank you.
Now, that act is expected to be a game changer where it gives comfort to external investors. Currently, when you register any vehicle in Ghana, you must register it as a limited liability. What it means is that when the company does any wrong, they can come and sue you. No investor is ready for that. I want to put my money in the vehicle. If the vehicle doesn't do well, I am off. If it does well, I can get my money back, kind of. So we are leading the passage of the Limited Partnership Act for Ghana, and we expect that hopefully with this new parliament, we should be successful this year and then announce for everybody else to hear.
On this excellent news, I'm going to thank the panelists. Our time is up, unfortunately. I want to give the ability for people to come after. Let's stand up for a quick photo shoot. Yeah, so, yeah. All right. Thank you.